Hello everyone, this is Phil Yaeger. Today we're going to cover the dividend received deduction for corporations. We are obviously in regulation, and let me just go over this. Now, the Tax Cuts and Jobs Act, actually changed the dividend received deduction percentage. So, remember, let's go over this. The dividend received deduction is generally taken by C Corps who receive dividends from another domestic corporation. However, remember, personal service corporations and personal holding companies, which could be C Corps, cannot take the dividend received deduction. And remember, the S corporations cannot take the dividend received deduction. So basically, it's C corporations except personal service corporations, personal holding companies, and also S corporations are not eligible to take the dividend received deduction. Now, you have to know the percentages. The dividend received deduction is based on what percentage of the stock you own. Now, if you own less than 20% under the Tax Cuts and Jobs Act, your dividend received deduction is now 50%. If you own anywhere from 20 to 79%, the dividend received deduction is 65% of dividends received. And if you own 80% or more, the dividend received deduction is still 100% of dividends received. Now, if we look at the chart you have that in front of you, it shows 3 examples. And I'm going to go through these examples, and this should explain the dividend received deduction. Now, in example 1, we have a profit from operations. Profit from operations means sales minus operating expenses. It does not include the gross dividends. So, if you have a profit from operations, your dividend received deduction is always the dividend received deduction percentage times the gross dividends. Profit from operations, that's the rule. So if we look at example 1, where a corporation received $100 in dividends from a domestic corporation, the corporation has a profit from operations of $400. The taxable income before the dividend received deduction is $500. Now, how do we get that? Well, we take the profit from operations of $400. We add in the gross dividends of $100. So now we have taxable income before the dividend received deduction of $500. Well, they own what? 19%. If you own less than 20%, your dividend received deduction is 50%. And because they have a profit from operations, you will take 50% of the gross dividends, which is $100. 50% of 100 will give you a dividend received deduction of $50. $50. All right. Now, if you have a loss from operations, it's a different rule. Now, let's look at example 2. Here we have a loss from operations, and the dividend received deduction does not create a loss. All right. Now, let's see what we have here. We have a corporation received $100 in dividends from a domestic corporation, of which it owns 19%. All right. Losses from operations of $35. We add in the gross dividends of $100. So now we have taxable income before the dividend received deduction of $65. Notice we started with a loss from operations. All right. Now, this is the rule if you have a loss from operations. Apply the dividend received deduction percentage. In this case, it would be what? 50%. So we take 50% of the gross dividends of 100, all right, which is what? $50. Now, we subtract the $50 from the taxable income before the dividend received deduction of $65. If it doesn't create a loss, which it doesn't, because if you subtract $50 as your dividend received deduction from your taxable income before the dividend received deduction, you still have a profit of $15. So if it doesn't create a loss, you take the dividend received deduction based on the percentage of 50% times the taxable income before the dividend received deduction, which would be $65. So therefore, 50% of 65 will give you a dividend received deduction of $33. Now, what happens if you have a loss from operations and you do take first your percentage of the gross dividends? All right. If you subtract it from taxable income before dividend received deduction and it creates a loss, taxable loss, then your dividend received deduction is the percentage times gross dividends. Now let me show you what we're talking about here. All right, in example 3, the corporation receives $60 in dividends from a domestic corp of which it owns 19%, so your percentage is 50%. Now, they have a loss from operations of $120. We add in the gross dividends of $60, and they have a loss of $60. Well, the rule says you can use the dividend received deduction percentage times gross dividends if it creates a loss or adds to a loss. Well, they have a loss already of $60. So by taking the 50% of the gross dividends, it's got to add to that $60 loss. So therefore, it'll be what? 50% of gross dividends is your dividend received deduction. So let's see what we have here. If you take the 50% of gross dividends, which is $30, all right, then subtract it from the taxable loss of $60, it creates a loss or adds to a loss, which it does. So therefore, the dividend received deduction will be the dividend received deduction percentage times the gross dividend. So if we have a taxable loss before the dividend received deduction of $60, all right, and by adding the dividend received deduction of, we take what here? 50% of the gross dividends of 60. Notice it adds to the loss. That's why we take 50% of the gross dividends. But if it doesn't add to or create a loss, when you have a loss from operations, your dividend received deduction is always the percentage times the taxable income before the dividend received deduction. All right? Now, these are the only scenarios they could give you. All right? Make sure you know the special rules where you have a loss from operations. And I would apply this to multiple choice, all right, that deals with this area. All right? So whatever book you're using, if it's our book, I'm sure you can find some multiple choice on the back on the dividend received deduction. And also, all right, if you're not using our book, your course provider should give you questions on that. Okay? Thank you, everyone. Take care. Good luck. And you're going to do that dividend received deduction right. I promise you. Take care.